The global financial system was sent into a tailspin today with news that China has reportedly canceled all US dollar payments. This unprecedented move affects an estimated $1.4 trillion worth of transactions. Such a decision marks a significant escalation in China's ongoing efforts to reduce its dependence on the US dollar. The impact of this decision is far-reaching, with potential ramifications for the global economy. While the news has yet to be officially confirmed by Beijing, the rumors alone have sent shockwaves through global markets. If true, this move represents a seismic shift in the global financial order. It signals China's growing assertiveness on the world stage and its willingness to challenge the dominance of the US dollar. Analysts and economists are scrambling to understand the implications of this move. Some believe it could lead to a fragmentation of the global financial system, with the emergence of competing currency blocks. Others see it as an opportunity for the rise of alternative currencies, such as the euro or the Chinese yuan. What is clear is that this decision, if confirmed, will have profound and long-lasting consequences for the global economy. It remains to be seen how the United States and other major economies will respond to this bold move by China. News of China's reported cancellation of US dollar payments sent shockwaves through Wall Street. The Dow Jones Industrial Average plummeted over 1,000 points, while the S&P 500 and Nasdaq experienced similar declines. This sudden downturn reflects the deep uncertainty gripping investors. The US dollar, long considered a safe haven asset, also took a hit. Investors, fearing a decline in the dollar's global dominance, rushed to sell their holdings. This resulted in a surge in the price of gold, a traditional safe haven asset during times of economic uncertainty. The financial sector, heavily reliant on the stability of the US dollar, was particularly hard hit. Major banks reported significant losses, with some analysts predicting a wave of consolidation within the industry. The fear is palpable as investors grapple with the potential consequences of a world where the US dollar is no longer the dominant currency. This uncertainty is compounded by a lack of clarity regarding China's motivations and the long-term implications of its decision. Until more information is available, Wall Street will remain on edge, bracing for further volatility and potential economic fallout. The impact of China's decision is already being felt far beyond Wall Street. American farmers, already reeling from the ongoing trade war, are bracing for further economic hardship. China is a major importer of American agricultural products, particularly soybeans and pork. With the cancellation of dollar payments, these vital export markets are now in jeopardy. The trade war had already led to a steep decline in Chinese purchases of American agricultural goods. Farmers, facing plummeting prices and mounting debts, had been hoping for a resolution to the trade dispute. This latest move by China dashes those hopes and threatens to plunge the American agricultural sector into a deep crisis. The cancellation of dollar payments introduces new layers of complexity and uncertainty. Farmers who had already signed contracts for future deliveries are now left wondering if they will be paid. The lack of clarity and the potential for further escalation have created a climate of fear and anxiety within the American heartland. The situation highlights the vulnerability of American farmers to geopolitical tensions and the risks associated with over-reliance on a single export market. It also underscores the high cost of the trade war, not just for China, but for American businesses and workers as well. China's reported cancellation of US dollar payments, while sudden, is part of a long-term strategy. Beijing has been pursuing de-dollarization for years to reduce economic vulnerabilities. The dominance of the US dollar gives the United States an unfair advantage. China has promoted the yuan as an international currency. It has signed currency swap agreements to bypass the dollar in trade. China has also reduced its holdings of US Treasury bonds. This strategy is driven by economic and geopolitical considerations. Section 5. Trade wars and currency conflicts. A tangled web. China's decision to cancel dollar payments cannot be viewed in isolation. It is inextricably linked to the ongoing trade war between China and the United States. This trade war, which began in 2018, has seen both sides impose tariffs on billions of dollars worth of each other's goods. The trade war has already had a significant impact on the global economy, disrupting supply chains, raising prices for consumers, and fueling uncertainty. China's latest move can be seen as both a consequence of the trade war and an escalation of it. Some analysts believe that China is using its currency as a weapon in the trade war, attempting to put pressure on the United States to back down from its tariff demands. Others argue that China is simply acting in its own self-interest, reducing its dependence on a currency that it sees as increasingly weaponized. Regardless of the motivation, the intertwining of trade and currency disputes has created a complex and volatile situation. The potential for miscalculation is high, and the consequences of further escalation could be severe. The world is watching nervously as the two economic superpowers engage in this high-stakes standoff. The yuan's ascent, a new player on the global stage. China's move to cancel dollar payments has reignited debate about the potential for the yuan to emerge as a viable alternative to the US dollar. While the dollar remains the dominant global reserve currency, the yuan has been steadily gaining ground in recent years. China has been actively promoting the yuan's internationalization, encouraging its use in cross-border trade and investment. It has also taken steps to make the yuan more convertible and to develop yuan-denominated financial markets. However, there are still significant obstacles to the yuan's ascension to global reserve currency status. One major challenge is the lack of full convertibility of the yuan. The Chinese government still maintains strict controls on the flow of capital in and out of the country. Another challenge is the lack of depth and liquidity in China's financial markets. The yuan's value is still heavily managed by the Chinese government, which makes it less attractive to international investors who value market-determined exchange rates. Despite these challenges, the yuan's rise is undeniable. China's growing economic clout and its assertive foreign policy are leading more countries to consider the yuan as a viable alternative to the dollar. The long-term impact of China's latest move on the global currency landscape remains to be seen, but it has certainly accelerated the debate about the future of the dollar-dominated system. A de-dollarized world, a future yet unwritten. China's decision has sparked discussions about moving away from the US dollar in global finance. De-dollarization is gaining traction as countries grow wary of the dollar's dominance. Emerging markets, especially China, are driving this trend. They seek a greater say in the global financial system. The implications of a de-dollarized world are far-reaching. Change is afoot, and the future of global finance remains unwritten. Unconfirmed reports, a need for caution. While the news of China's cancellation of US dollar payments has sent shockwaves around the world, it is important to note that these reports remain unconfirmed. The initial source of the information has not been publicly identified, and the Chinese government has yet to issue an official statement. In today's fast-paced media environment, information spreads rapidly, often without proper verification. It is crucial to exercise caution and to rely on credible sources for information. Unconfirmed reports can lead to panic and misinformation, which can have real-world consequences. Until the reports of China's decision are independently verified by reputable news organizations or confirmed by the Chinese government, it is important to treat them with a healthy dose of skepticism. It is possible that the initial reports were inaccurate or exaggerated. It is also important to consider the source of the information and any potential biases or agendas that may be at play. In today's complex geopolitical landscape, information is often used as a weapon. It is essential to be critical consumers of information and to be wary of attempts to manipulate public opinion. The road ahead, navigating an uncertain future. The world is entering a period of profound economic and geopolitical uncertainty. China's reported decision to cancel US dollar payments, if confirmed, would represent a significant escalation in the ongoing economic rivalry between the world's two largest economies. The road ahead is fraught with challenges. The global economy is already grappling with slowing growth, rising inflation, and supply chain disruptions. The war in Ukraine has further exacerbated these problems, adding to the sense of unease and uncertainty. In these uncertain times, dialogue and cooperation are more important than ever. The United States and China, despite their differences, must find ways to manage their rivalry peacefully and to work together to address common challenges. Failure to do so could have disastrous consequences for both countries and for the world. The world is watching anxiously as the situation unfolds. The coming days and weeks will be crucial in determining the course of this latest chapter in the US-China rivalry. One thing is certain, the global financial order is in flux, and the future remains highly uncertain.